Sylvester Stallone knew his whole life what he wanted to do. For him, it was a chance to inspire others. Life wasn't easy. At birth, he was pulled out by forceps. That's why he looks and speaks the way he does. 1,500 agents said, no, you're not an actor. His first three scenes led to nothing, but he never gave up. Sly sold his first Paradise Alley for $100. That money didn't last long. The last thing he had left was his dog. He got $25. That was a rock bottom. He cried, and soon after, watched a fight between Muhammad Ali and Chuck Wepner. Wepner went 15 rounds but was pounded to a pulp. It inspired Sly, and he wrote for 20 hours straight the entire Rocky movie. Tried to sell it, but nobody wanted it. Too predictable, too sappy. Sly saved those comments and read them to himself the night he won the Oscar. Sly never gave up. One day, two guys offered to buy the script for $125,000. Sly said with one condition, I'm Rocky. No way. We need a star like Ryan O'Neal to play Rocky. Can you imagine? The same guys called him back and offered him $250,000 not to star in his own movie. Sly said no. They counted with $325,000. Sly said no. They compromised. $35,000, points in the movie, and Sly would play Rocky. Rocky has grossed over $225 million, and the entire franchise over $1 billion. What's your Rocky moment, folks? What's your vision? Your unstoppable success. You were born to be a money master. The time is now to take massive action.
Let's go over to Don in Odessa, Florida. Don, thanks for calling. Thanks for holding.
Hey, thank you.
You bet. How you doing today?
I'm doing okay. I'm proud of you, so just want to let you know that I appreciate what you're doing.
Wow. Thank you very much.
The Trader's Edge with your host, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the October 23rd edition. Yesterday was Magnificent Monday. Today is Terrific Tuesday edition of the Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I absolutely treasure your presence here today. My outcome is to help you to become a better money master and to provide you the tools that you need so that you can lead an inspired life. Because leading an inspired life, folks, that is what it's all about. If you're a bull, there's not a lot of inspiration out in the marketplace here right now. Futures are down big. We're going to get to those real quickly, but let's go take a look at one of our tools. This is a fantastic tool. This is called the tool of self-appreciation. In fact, what I like to think of it as your self-appreciation inventory. So get out your pads and pencils here because what I want everybody to understand, and you already know this, is you are a tremendous success in so many ways. You know, and it's important to just simply take a few moments out of each day and just appreciate what it is that you've accomplished, thus far, and in your path to becoming all that you can be out there. And I'd love for you to be able to take a self-appreciation inventory. We all have, most of us at least have different mobile devices, iPads, iPhones, Google devices, and there's always those little memo sections in there. And really, you should put down your self-appreciation on your memo. Probably the most important memo there isn't your grocery list or your to-do list. It's really your self-appreciation inventory list. So start by asking yourself a few questions. And it's really the same question. It's just different time frames. It is, what have I achieved in the last, let's just call it week, the last 7 days out there? Maybe it's just the last couple of days for you. What have you achieved in the last 2 weeks? The last 6 months, the last year, maybe the last 10 years. Just write down a few of those things that you have actually already accomplished out there. It's the same question, just use different time periods out there. And I think what you'll find, it's pretty amazing all that you have accomplished. After you write those, answers down, you've taken your self-appreciation inventory, then you got to say, hey, is that all that you want to accomplish out there? Maybe you're so busy, just trying to reach your goals, you haven't taken a second just simply to sit back, take a look at what you have accomplished, because what that will do is that'll inspire you on to additional, first just kind of puts things in perspective out there. And when you actually spend a few moments and you actually write them down and you take a moment just simply to reflect on it, you're going to be amazed at just how much that you've grown out there. Then what you want to do, and we'll talk about this tomorrow, because you are already a tremendous success, folks. So take a moment and celebrate, but maybe think about those things that you want to accomplish in the next 2 weeks, in the next month, in the next 6 months, in the next year out there. take a moment, write down your self-appreciation inventory list. Let's go take a look at these markets out here. They do not appreciate the bulls. All the bears have shown up for work. Looks like in full duty. We're going to start off by taking a look at the daily charts out here. Let's go take a look at the ES Mini. First, if we take a look at the Dow futures, are off about 150 points. The ES Mini traded out at 1413. That's down 17 points. The ES Mini today is going to be a very important close, just as yesterday was. But why today? Well, if you take a look at the ES Mini, number one, it's breaking through a old resistance area. That became support. That is that black horizontal line that is going across my screen. If you're watching us on Tiger TV, if you're not, you can always catch an archive of this show on Channel 9. You'll see what it is that we're taking a look at. Also, you've got the S&P, which has been traveling in really a sideways consolidation range. The low of that consolidation has been in the 1416 level. The high of the consolidation right around the 1465-ish and change. That level being broken. You can see the ES Mini moving down into a day of strength. I classified as a day of strength. It was Mario Draghi Day. That was September 6th. Doesn't matter really what the reason is, but you've got this nice bullish candle, this nice wide-ranging bar. And you can also see that yesterday we were showing you the trend line resistance coming off of the June 4th lows. The ES Mini went down, tested the horizontal support, closed back up above the trend line, and today it's taking that trend line out. It's going to need a lot of bulls to show up in the marketplace in order to get that above the trend line. Now, what is it that you can expect if this trend line is broken? Well, number one, you can expect lower prices coming at you. You say, how low? Well, let's go take a look at it. And what we're going to do is just simply take a look at a couple different tools out there. First thing, let's go take a look at the retracement. Let's go from the low to the high, and what we're looking at is areas where the market would pull back to. You know that if you're in the Clearwater area, you're going to come up to the TFNN headquarters, and you're going to visit us at what suite? That's right, Suite 618. Well, Suite 618 on the ES Mini is 1340. The first area that I would expect that it would stop right around the 0.382 level. That happens to be about 1389. It is also the next low swing point out there, 1394.50. That is September 4th low. That is where the ES Mini is headed to if, in fact, it breaks this horizontal resistance. And we'll see. Long trading session here to go, but you've got, companies coming out with earnings. It's all about King Dollar because people are missing the revenue numbers left and right. And all you really have to do is just sit back for a moment, take a deep breath, and take a look at the news that is out there. And in a bullish market, in a bullish cycle, in a bullish leg of any market, what happens with bad news? Gets consumed, gets devoured, gets thrown out. Right now, what we're seeing here, this is not the sign of a bull market leg. This is the sign of a correction. How serious a correction? I don't know. We just simply take things one day at a time here. Right now, what we know is on the ES Mini, you've got certain areas of important areas, quite frankly, of support because you're coming off of a pretty decent trend going all the way back to the June 4th level. This is short-term that we're looking at, folks. This is not a long-term here, not making any long-term calls, just simply take a look at where I believe the markets will push down into coming into Friday or Monday of this week. Now let's go take a look at the Russell 2000. That had been weak out there. Then we'll take a look at the Dow, and then we'll go take a look at the NASDAQ futures. If we take a look at the Russell 2000 out here, Russell 2000 on its way down to making an A to B equals CD. The 1-to-1 is going to take it to 792. Is that where it will stop? Absolutely not. No, it'll go much lower. In fact, I imagine that we'll see the Russell 2000 get down to 778, maybe 761. That's the most logical place. Right now, you got the Russell making a 100% move coming down into the swing point low of August 31st. That low is 802. You're at 810 right now here this morning, taking out also an area of support. That is really this black horizontal line that is growing across my screen. That area was tested several times. That area being in the range of about probably 818 or so. That being taken out. If you get a close above that today, that would be very bullish out there, but it doesn't look like it's in the cars. The Russell 2000 has got much, much more room to go before it starts to get into an oversold condition. If we just simply take a look at retracements off of the low to the high out here, what you're going to see is the 0.618 is looks like about 781. So 778, that's the first target. I would expect that what we'll really see here if things get rolling on the Russell 2000, is a move down to that 0.786. That's just one floor above us. That would be in that 758 and change area. Now let's go take a look at the Dow. Now you can also see here on the Russell 2000, of course, you're going to see a number of lines or what have you. What you can see is coming off of that same, in this case, it was the June 5th low on the Russell 2000. You can see that that area of support, that is your rising price trend line. That area is being penetrated this morning. It closed below that. Says, now it doesn't say that there can't be a bounce. In fact, when you break trend lines, what you do is you just simply will bounce up, you'll test them, and then if you get back inside the range, it was just simply a false break to the downside. So you can expect that, the market breathes. It needs to be able to, on an intraday basis, work off oversold conditions. But as I said a couple of days, as I said yesterday, short-term bearish. I've my retractable horns are down. We've got one holding that actually did pretty well yesterday in the Mastering Probability newsletter out there. It's long. We'll see how this thing is going to trade this morning. We've just simply tightened our stop. We'll let the market tell us what it wants to do and go ahead and take us out. Let's go take a look at the Dow futures here. As we look at the Dow futures, they are trading down 153 points right now. The Dow futures here breaking all kinds of support and doing it really with conviction. Now, the Dow had also been trading in this little sideways range. That sideways range, really the low of it being the October 15th. I suppose you could use October 15th. I really like this horizontal resistance line. That is a better part of the range here. In fact, that's what I'm really going to go with, because as I take a look at that, that also happened to be the close to the low of the session on September 13th. That was Federal Reserve QE3 day, Ben Bernanke day. That low is 13,248. You're 13,142. And if we take a look at where is the Dow futures headed to first stop on this bus tour is going to be 12,965. Those are the swing point areas back in the early part of September 4th, 12,965 there. If we go take a look at the retracement from the low to the high out here, the low to the high, sweet 618 is going to be 12,602. That is where the Dow is headed to. It'll stop first. Now, what's interesting is the 0.382 level, 12,000 in that 900 range. Let's see, 12. Let me give you a number here. What was it? 12,970, let's call it. That's going to be the 0.382 level. I suspect that is where we will see the Dow move to. It should let off a few folks off of the elevator where it'll bounce a bit, get a little bit of energy. It is only Tuesday, and I do believe we will see a lower low come Friday or Monday of this week. We'll take things one day at a time. Let's round this off. Before we go to break here, let's take a look at the NQ. Let's see what that is doing this morning. Trading down, the NASDAQ futures trading off 26 points right now. Of course, over in Europe, they are having a little bit of a hangover this morning, down about 1 6/10%. You've got the NASDAQ futures right there at that rising trend line, trading out at 26.61 right now. That is a little bit of strength, if there is strength in these markets. 877-927-6648. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to your long-term investment. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do. Call Angela O'Brien, first Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial allocation does not assure a profit or protect against financial investments and services are Morgan Stanley Wealth Management LLC, SIPC.
With the launch of TigerTV,
TFNN
has brought our programming to the next level. With TigerTV, you gain access to each host charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pizzamento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get my recommendation is let that be you. Each someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great. I'll show you how to create ultimate financial a set of tools, insights, and strategies that are part of my daily newsletter, Mastering Probability. You'll have direct access to me by phone, email, my private library, trading and investing secrets for 30 days with an unconditional money back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage of TFNN.com, and turn your dreams into reality. Mastering probability, folks. Let that be you.
Are you looking for a edge in the market? Something that can stack the odds in your favor? Larry Pizzavento's new trading patterns, profits, and peace of mind. In each weekly issue, Larry explains what's going to happen based on the patterns he sees developing, and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of sectors, including stocks, treasury bonds, the gold market, the dollar, the forex market, and you'll get the technical corner segment, which is a short weekly trading session on trade access to all the patterns Larry is seeing in the markets, plus the astroharmonics and the stock market model that Larry utilizes for $5 a day. Extremely potent combination, just the edge you've been looking for. Try patterns, and peace of mind, absolutely free for 2 weeks. TFNN.com and click on the free trial link at the top of the page. That's an $85 value. Yours free when you register right now. Get Larry's patterns, profits, and peace of mind, and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive of the newsletters for free at TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Welcome back. We've got the King dollar up 30 ticks out here right now. Gold trading down $13 out at $17.13. Silver off 26 pennies, down 0.8%. Silver trading out at $31.99. You've got light sweet crude off $1.63. That's down 1 8/10% here. As we take a spin around the globe, last night in Asia, a little bit of a mixed bag. You had the Shanghai off 19 points. The Hang Seng up 145. You had the Nikkei up 3, so pretty much flat out there. Over in Germany, Europe this morning, you've got the DAX down 1 7/10%. You've got the FTSE off 1 2/10%. The DAX down 124. The FTSE off 73 points right now. What I do have on my screen here is the DAX. We can see the DAX here is going to come and test the lower part of this consolidation area. It's been consolidating ever since the Super Mario date of September 6th. The high of that is 71, 72, 32. You got a little bit of a open window there, a little bit of a gap there. That is going to be tested. It's going to be tested here this morning. Thus far, it has held. You got a little bullish engulfing candle on October the 11th. That low, 71, 82, 31. You close below that. I would say here, if you close the window, that no longer becomes a support level. So if the DAX closes below 71, 72.32, The next level of support really on the DAX is most likely going to be this rising trend line. Shorter term, it's got the rising price channel. That's the red lines that you're taking a look at on my screen here. I suspect that what it would do is it would punch down. It'll try to see if it can hold both those levels because they're really not that far apart from each other. That would say you'd be looking probably somewhere in the range as we come into Friday. If I could read these numbers, looks like probably about 70 or so. That is on the DAX. It's at 71.99. That says it's got 100 and some odd points left to go to really test a support level. That's on the DAX. Let's go take a look at the FTSE over in the UK, see what that is doing. Boy, that's got a wide-ranging bar to the downside. So let's go take a look at the FTSE. Let's draw some lines out here. Let's draw some lines of support. See if it has broken through there. We're just simply going to come off of the low of June 4th. Our next touch point is going to be July 26th. Oh, yeah, it broke it. It broke it big time. And so now where the FTSE ought to travel to, well, first, it's inside the swing point from October 11th. So 57.66 is its next stop. It's at 56.08. It will get there today. You then got how about that for language? You've got there's another low out there from a swing point of October 1st, 57.38. And let's just take a look at retracements from the low to the high. We're going to go down to the June 4th low, all the way up to the high that was put in here on the FTSE. That occurred on the 14th of September out there. Right around the 56.64 level is the 0.382. You've got a nice morning star candle out there. I suspect that is where the FTSE is first headed to. Let's go take a look at the U.S. dollar index trading up 30 pennies right now. We showed you this yesterday. We were taking a look at the trend line, the descending trend line that was coming off of the highs here in July, that high being 84.25 out there. Really, the next touch point that I was using here is the high from the candle on August the 16th. That level, 82.96. You can see that the U.S. dollar index up until Friday was only able to test that line and then close back below. That has not been contained out there. And actually, if you take a look at what's going on with regard to earnings and the big guys missing the boat, and the mere fact that what they're talking about is it being a currency issue, primarily a currency issue out there, this red dashed line, so what's being reported, it's October the 23rd, so we've got third quarter results, or we've got results, if you will, from July 1st through September 30th. So if we go take a look at the U.S. dollar index here, July 1st, and I've got the daily chart, so really it's July 3rd. That's this little red dashed line. You can see half of the time you've got the U.S. dollar index, about half of the time, just to give you an idea. Half of the time, because when I say half the time, let's take a look at all the way from July 1st through August 21st. Sounds to me like pretty much about half of the time. So half of the time, you've got the U.S. dollar index trading higher, and the other half of the time, you've got the U.S. dollar index trading lower. In fact, you had more, so about half and half, right? Half and half. And they're doing, in essence, currency revaluations out there. Well, what happens if the king really takes off? What do you think the first quarter or the last quarter results will be out there when you start doing those types of valuations? And you're breaking a trend line here. Does not mean that it won't come back and be tested. But that test really could have come yesterday as the U.S. dollar index got down to 79.54. What's that all about? It's all going to be about the Queen. The Queen here, she is going to come back and test that neckline support. That's that red vertical line, diagonal line that you see on my screen. 877-927-6648. We get back, we'll go see how these markets are going to drop, whether or not they're going to pop. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor. And now you can have access to his trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, traders, investors, and money managers a thorough strategy for trading options and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific recommendations on the market. Using advanced Fibonacci methods, volume indicators, godly patterns, candlestick charting, and market timing. Market Insights will give you specific recommendations, including entry, stop, and exit prices. Summer is over. Traders are back. Get your free trial to Market Insights today by visiting the front page of TNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween will be taking place at the end of October. And for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com, where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com, or check them out on the NYSE Amex symbol GPL, or on the Toronto Stock Exchange symbol GPR.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
You got the Dow up 159, S&P's down 16, Composites off 31, small caps off 8. Leading the charge on the way down, out by a nose, is the Dow Jones Industrials. You got Microsoft off 12 pennies, Intel down 12, Google off $3 and change, Cisco off 15 cents, Apple, which held the market up yesterday, looks like it is cracking a bit here, down $6 and change. I believe it was up $20 yesterday. We have that chart here on my screen on Tiger TV. Let's go take a look at what is popping and what is dropping out there. So popping to the upside, you've got Coach Inc. COH is the ticker symbol, up a nice 7% here this morning, up $3 and change. Let's see, were they out with earnings here? They announced a $1.5 billion stock repurchase program. Not a good sign out there, folks. That is how they're using their money versus expanding Q1 net income, $221 million versus $214, not bad. And net sales, 1.16 versus 1.05. Their outlook must not be very good if they're out there buying stock. We'll go take a look and see where their stock is actually trading at on the stock charts out here. I believe it's also an IPO that is not that far, hasn't been out there for that long. But we'll go take a look. I could be wrong on that. You've got the, let's see, next up, you've got ARM Holdings, ARMH, up $2 and change. That's up 7.5%. UPS up $1.59, up 2%. Whirlpool, WHR, I haven't looked at that stock for a while, up 40 cents. Dropping to the downside, led by Apple. Apple down $7 and change right now. That's off 1%, down 8% this morning. You got Auto Live, Auto ALV. What is that? ALV. Let's go take a quick peek here. That's down 8%. Not familiar with the ticker symbol. Autoliv, AUTOLIV. Let's see, what are they? Gauge in development, manufacture, and supply of automotive safety systems to the safety industry. Well, they're down here this morning. The leader, number 2, down. You've got Google right behind them, down $5 and change. You've got TRW Automotive Holdings off about $4. Alexion Pharmaceuticals, ALXN, off 3.5%. DuPont out with numbers. They're down 7% this morning, off $3 and change. Melanix Technologies, MLNX, off 4%. 3M out with earnings as well, I believe, down 3%. Here this morning, Amazon down about 1%, down $2.78. Let's go first start off by taking a look at Apple out here. Apple is going to come down and at least test this high volume bar from 935 yesterday morning. That price there is going to be $617.14. It's at $626.64 right now. We'll see what Apple does when it gets down to that level. The low of that candle is 610.76, and that's really where it moved up. If we take a look at volume here yesterday, let's go put the daily chart up here on the screen so we can see what Apple did daily-wise. It had volume, not too bad, 19 million shares. At 19 million shares going against that downdraft, though, from Friday that had 27 million shares to the downside. You can see Apple here had broken that trend line. Remember, we talk about when you break a trend line, what the equity is likely to do is to come back and test it. Well, in the case of Apple yesterday, giving some real hope to the bulls out there, was not only did it test it, it got back inside the range. You do that in one day, and it says, something to think about. Might be snapping and cracking and right back up there. Of course, today, if Apple, in fact, does give it up, what you will see is you will see the markets not just down 195 points like they are right now. You'll see these markets down much, much lower. Apple really being out there with it such a heavy weighting in the Qs, really holding the market up yesterday. He did talk about on Friday that we had a trend index rating of, I believe it was about 2.54. And when you see those, when you are above a 2, when you get a close above a 2, it talks about having a one-day rally out there. Well, that's what you really got yesterday, was a one-day rally. You did have the Dow that was down as much as 100 points. I think it finished up maybe 3. That was your rally. And now the move to the downside is resuming out there. Let's go take a look at, in fact, let's go take a look at some of the ETFs. Let's go take a look at let's look at the daily ETFs here. First, let's take a look at the Qs popped up on my screen here. So let's go take a look at that. That is on its way to extending its A to B equals CD down. It's at the 1 to 1.618 level right now. That's trading out at 65.40. If we do take a look, let's come back all the way into the September, the June 4th level. We're going to take a look at a retracement from low to high out there. And as we take a look at that, the Sweet 618 says the Qs headed to the 1 to 2 A to B equals CD. That would be 64.07. However, that is the small A to B equals CD. So let's go ahead and let's redraw an A to B equals CD. Let's take a look at the other B point out here. That would be October 12th. That had 24 million shares. Now, as you came through that, 75 million shares. So 75 million shares taking on 24 million shares. What do you think? You think the larger A to B equals CD could unfold? Let's go take a look at what that price projection is. Your A point being the September 19th high, 70.58. I mean, down to the B point here. Let's see when there was the actual low. You've got October 12th, 6656, and you've got 6667 on the 11th. We're going with the 12th. That's the lower price point out there. And now your C point here really really being a shallow retracement out there. So a 1 to 164.07. Nah, it'll blow that area away. 1 to 1.272, 63.33, maybe, but more likely right down into the swing points here, where you have just really a whole set of, this area of congestion out here. I would say you'd be looking at the July 25th low. That is 62.15. 61.99 is the 1 to 1.618. A to B equals CD. If volume continues to the upside, June 4th will be tested in no time at all. Let's go take a look at the SPYs out here. The SPYs actually have been pretty solid. We're taking a look at the SPYs, certainly gapping down here this morning, gapping down below Mario Draghi Day. That is the September 6th level. You can see here the SPYs really just traveling in this sideways consolidation, not really an A to B equals CD that you could craft out here. That to me makes sense. What I would do is just simply take a look at the retracement from the low to the high and be aware of the swing points that are out there. The 0.618 area, 135.15, that would be that would be nothing wrong with it. But however, if the SPYs start to pick up volume as they start approaching that area, what that says is the SPYs would head down into the 131.62 level. That is your 0.786 retracement. Let's go take a look at the Dow Diamonds out here. As we do that, we've got the diamonds trading out at 131. The diamonds out here, there we can draw an A to B equals CD more easily. Let's go ahead and let's just erase some of the stuff off the screen here. So let's take a look at A to B equals CD patterns. Probably it's the same one on the SPYs as well. We'll just use the swing point high of October 5th, 136.44. The low that we would use October 12th. It bounces back up into October 18th. You can see it's already done a 1 to 1.272 today. The diamonds here, probably your last bastion of hope as it comes into the September 6th Super Mario gap up. It's got an open window. If, in fact, the diamonds close below the September 5th high, that would be 130.83 out there. That will say that you'll see lower prices in the diamonds. If you come off of the low to the high, 0.618 happens to be a 1 to 2.618 of just simply that small A to B equals CD. So 126.40 looks to me to be the target range for the Dow Diamonds out there. That is, unless the bulls decide to step back in and try to take over the marketplace out here. They did yesterday at 3 o'clock, but we were expecting a one-day rally, and that is what you got. You can say that with regard to the rally, maybe it wasn't so big. I say with the Dow being down 100 points and then coming back, that really was not too bad of a rally, because without Apple, if Apple had not done what it did yesterday, being up $20, you would have seen a little bit of a meltdown out there. Let's go take a look at percentage-wise what's popping and what's dropping. So let's go start off with Coach. COH is the ticker symbol, and let's go see what that is doing. It's up nicely this morning, up 13%. So up 13%. Let's pull this thing back here. Okay, so let me put this actually on a weekly chart out here. Refresh. Okay. So yeah, this is not what I was. That was not what I was thinking. So if we take a look at Coach here, actually not really doing too bad. Now, when I say not doing too bad, take a look at where it's trading. 57.35. Its most recent highs out here at $77, and they're out there buying stock. Kind of makes you say, something to think about. You do have this wide-ranging bar here. The high of that is 62.48. This is the weekly chart. If Coach tries to get some energy, that is what is recently holding that equity in place. That is the highs. Had this nice evening star candle formation that formed the week of September 7th, the week of September 14th, and it finally gave you that signal on September 21st. That says on Coach, you've got a pretty good resistance area at 63.24. It's at 57.40 right now. To the downside, you've got TDG, Transdigm. Let's go take a look at that, see what that is doing, down 5.6% here this morning, off $7 and change, gapping down. Let's go take a look and see what this is going to be going after. Certainly a high-volume bar out here. That high-volume bar happens to be the week or the day of July 24th. Trading inside there right now, that had 1.8 million shares. The low there was 117.77. That was 1.8 million shares. Thus far this morning, 112,000 shares in 15 minutes of trading out there. TDG, Transdigem, were they out with some numbers or anything? Let's see. No numbers here that I see out here. So I don't know what it is that is set this off and is leading this down. Let's put this on. This is. Let's see if this is really the first. You had some selling out here that was rejected back on July 24th. So that was rejected. That was really your only sign of institutional selling here. Well, that was until today. Interesting. Let's take a look at some candle patterns out there. Let's go take a look at, I believe somebody in the den wanted me to take a look at the financials. So let's go take a look at the XLF, see how the XLF here is holding out. That is one of the sectors with inside the S&P 500. Right now we've got the XLE on my screen here, though. First, that is gap down here this morning, taking on the swing point from October 15th. That swing point, 8 million shares out there. Thus far today, 1.3 million shares. So now you're starting to see the energy sector give it up. If we take a look at A to B equals CD patterns, should that swing point get broken, let's go take a look at it. Your A point out here is going to be the high that came in on September 14th. Your B point is going to be all the way down to the October 15th. That's a swing point being taken on today. This retraces back up for a few trading sessions. This says to me that the XLE is looking at probably about 68.29 as its next level that it wants to head to. That's under the assumption here that it's going to close below 71.91. It's at 71.89 and do it on more than 8 million shares. And if we take a look at retracements from low to high, I'll just go back to June 25th out there, although I probably should go back further. Yeah, let's just do that here. Let's go back to the low on the XLE, back down into the June 4th level, up to the high in September. Sweet 618 gets you to 67.31. Looks to me like that is where the XLE wants to travel to. Let's go take a look at the XLF, see if the financials are participating here. Yesterday, moving, down to sideways. Now, the financials, is really where, if the financials give it up here, now the financials, in a matter of perspective, if we take it all the way back, obviously the financials haven't really done much. But I use the financials as kind of a benchmark here because, you had the financials have got two signs of strength in there. Trading inside the one from Ben Bernanke Day, September the 13th out here. So the financials really holding up pretty well. I suspect that what we will see as the market moves lower, you'll see the financials at least come down. First, it's got to break the October 12th swing point. That low is 1576, 74 million shares out there. Yesterday, it did 105 million shares. Thus far today, 8.4 million shares. Breaks that level. What it will bring into play is a swing point from September 27th, and then finally it would bring into the untested area of the gap up on September 7th. The low there is 1557. You'd love to see it back into that area on lighter volume because that would set up the next bullish move, which I believe we will have one more of those before the election time frame. So the financials probably something to watch. Nothing I would want to get in front of here today, and that has not sold off that much. So it's holding up pretty well out there. On the intraday charts here, what we do have is the things in the relatively good oversold condition. So you got to expect the market here to bounce a bit and work that off because and the first one to lead and do that happens to be the NASDAQ futures, the NQ here right now. So you can see the NASDAQ futures trying to be the strong dog out there. Is there a bullish candle sign? There you had a morning star candle as we came into the 10 o'clock session right here. That says the low here on the 30-minute chart of 26.5675 is going to be a key area out there. NASDAQ futures trying to work off their oversold conditions. I expect we'll see the same thing in the other areas. However, on the daily charts, much further to run to the downside. 877-927-6640. Dow's off 170 right now. We'll be right back.
You take a hands-on approach to managing your investment strategies. You're always looking for the next trading opportunity to magnify your perspective direction shares are there to help you magnify your sophisticated traders ETFs for a rising market and bear ETFs for a falling market. Direction shares gives you the tools you want both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. Prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. Prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors deploying dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien, Steve Rhodes, as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
It's always better when we're together. Yeah, we look at stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. Dow off 181 points. Bright spot in the marketplace here today. Whirlpool Corporation up $3 and change. That's up 7% here. Out with earnings. Net sales $4.4 billion versus $4.62. That's nothing to write home about. You got Q3 net earnings $74 million versus $177 million a year ago. So they've given some really great guidance out here wonder if they've got people snowed. Now, a cool stock chart here to take a look at. If you take a look at the Whirlpool, we're looking at the daily stock chart. And just simply going back to the most recent, last sign of strength that you see out here in Whirlpool took place February 1st, 2012. Gaps up with 13 million shares. Had closed out the prior session, well, let's say the prior session high on January 31st was 54.69. So you had wide price spread. You got to fill in the gap there in your mind. Had wide price spread, accelerated volume out there. That's where the equity broke out from. Look at this beautiful thing. The window still is open. That still is a strong area of support out there. But look at how the equity comes back and tests that area on June the 25th. Does that with 1.7 million shares. Again on June the 26th, 1.7 million shares. Going into the 2.6 million shares. I mean, that's really how you want to see it test, because the real benchmark volume that this is going against happens to be the breakout session. That is the 13 million shares on the way up. But what you like to be able to see it do, and you don't always get this, and that's where you've got to be able to make a little bit of a subjective call, make sure that you've got some good some good money management in place out here. But what you ideally want to be able to see is you want to see the session that gets tested, meaning the more difficult test. That would be the actual January 31st date. That was the date where it was 2.7 million shares. You'd love to see it come back and get tested on lighter volume. That's exactly what it did on the 25th, 1.7 million shares, and then 1.7 million shares on June 26th. Those lows of $54 and change haven't been seen here, and you got nothing more than really almost a straight line move all the way up. Today here, you've got some decent volume in there, 852,000 shares. That's taking on a most recent high of October 17th that had 1.5 million shares. Let's go put this on a weekly chart. Now, there is an A to B equals CD out here. Let's go take a look at that A to B equals CD on Whirlpool. Let's see if that, in fact, is completing. And because, it's so here today, it did it a couple of trading sessions ago, the 1-to-1 A to B equals CD. So let's put this on the weekly chart, see what else it is that we see out here in Whirlpool. Let me refresh my screen. You can see this coming into here, a area of resistance here. That area of resistance on the weekly chart, I'll just draw a line across the screen here, is tested, and it's testing it again as we speak today. So this could be the high here for Whirlpool, and then a pullback. Let's see. Last time it was up here on the weekly basis, you were at about the 7.7 million shares on January 28th. The week of April 29th, 8.5 million shares. Thus far this week, a million shares. That's really just as of yesterday. So you want to come back and take a look at Whirlpool here. Where can this thing pull back to? Well, I would say your next area of support would be that February 3rd high, $69.14. That is on the weekly chart out there. It might not be a bad deal if the volume is right out there, but that is on Whirlpool. Stay tuned, folks. Tom and I will be up next today with the Money Masters show. Then, as we do on each and every Tuesday from 11 to 12, we go up to Basil Chapman up in Newton, Mass. Today on Tuesday, it is the options hour. We go to Victor Jones. I believe he is out in Chicago. Just simply a fantastic option show. 1 to 2, Daryl Martin. 2 to 3, David White. 3 to 4, Ken Shreve. And 4 to 6, none other than the one and only, the Tom O'Brien Show, folks. I hope you're having a fantastic, terrific Tuesday morning out there. Stay tuned. Tom and I will be up next. If you're starting your day, have a safe morning. I look forward to seeing you tomorrow. Take care.
Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Let me tell you something, folks.